Commercial property may seem like an advanced investing strategy, but it's actually more accessible and affordable than you might think. Scott O'Neill from Rethink Investing sits down with your investment property editor, Sarah Megginson, to share the secrets to creating a passive income through commercial property investing.
The main reason is we're finding that there's a lot of opportunity out there to actually buy at a lower price point with a good quality tenant in place. So people often think commercial is a very highly expensive thing that you need millions of dollars to get into. But the reality is, you can find a property in a capital city for 350 grand, sometimes even less, with a good tenant in it, 3-year plus lease, good quality suburb. The barriers to entries aren't too high. And I think once people get past that, then they start seriously considering it and looking at it for its fundamentals, which is the cash flow is much better than any residential. So, like a 7% net yielding property can give you, on a 300, 400 grand property, $200 to $400 a week positively geared cash flow. In residential, the best you can expect would be an evenly geared, maybe slightly positively geared property, maybe $50 a week in your pocket. But then you're kind of going into poorer quality stock. So, main thing is I think people should consider it as, a definite option, because these do grow in value as well. So a common misconception is you don't get capital growth out of commercial. Couldn't be further from the truth. It's all about supply-demand ratios, just like residential. So, there's good cash flow, potential growth, and stability with tenants when you get the right tenant. Of course, they can go vacant on you, as you can with residential, but that's where you just got to do the research and buy the right type of property. Look, you've got to work hard for them. Like, there's definitely less out there. The stock in commercial is far tighter than residential. A 350 grand example we recently bought for a client was on the northern beaches around Manly Brookvale area, and it was an office space, 80 square metres. We paid 350 grand for it. That was a 7% or 6.9% net yield, 3-year lease, and we just found that through networking, talking to agents, doing all the usual stuff you would with residential, except it's a different set of agents, commercial agents, so you're not dealing with the same types of people. And if you spend all day, every day in that space, you'll get access to these off market, or if they're on the market, you just basically got to bid nice and quick when it's a good property. The number one reason is not many people do it. So I think parents and friends and family will mostly influence how you invest in life. If your parents or friends or extended family have never invested in commercial, which is the majority of Australians, you're never going to get access to have these conversations to talk to people who have done it. Once you've spoken to a number of people that have invested and done it multiple times, all of a sudden the big boogeyman that is commercial investing is not quite there. It's just lack of information, I'd say, is the biggest thing. I think talk to an expert who can compare residential and commercial and be unbiased to either side. So if you go talk to someone who only does residential, they're only going to tell you to buy residential and tell you all the negatives about commercial. And same goes with commercial. You want someone who can actually really plan for you, and then you go out and make your own opinion on which way is better. But yeah, look, it's just about seeking information and then taking it to the market, what's growing, what's not, where the best cash flow is, where the worst is, and then just making a collective decision. So seek advice from the right experts. So just like you would do with residential, I think you just got to start reading up on it. You need to talk to a lot of experts in the field that have purchased properties before, even just calling up commercial real estate agents just to ask them about what's coming up, just all that general chitter chatter you have around property. The same thing would happen in that space. But look, there's not a lot of data out there in terms of going, there's not too many good books out there which to read on the topic. So I think just chat to an accountant, chat to people who have just done it. That's the biggest advice. If you can't find someone who hasn't bought commercial property before, you need to go out and seek them, because that's your starting point. You know, someone who's been there, done that, preferably done it for many years and done it over multiple deals, so they can tell you the good side of things and the bad side. And all of a sudden you'll get knowledge, and you know, take your time. You know, it's not about going and starting the search and then 3 months later you've bought a property if you've never spoken to anyone. Just educate yourself just the same way you would with residential. It's just, again, a different set of people you've got to talk to.